Welcome to the Speed of Money, what faster payments mean for banks, consumers, and the economy. My name is Jackson Mueller. I was a senior associate with the Milken Institute, but as of this morning, Fox Business has declared me a senior fellow. So I'm looking forward to that new title until my boss says no.
So you got a promotion out of this, huh?
Yeah, it was nice. It was good to wake up at 4:30 in the morning for an interview. Yeah. So I've got a great distinguished guest list here. Jane Larimer, who's the Executive Vice President and General Counsel of the ACH Network Administration at NACHA. And then I got Dan Gonzalez to my right here, Vice President, Payment Industry Relations at the Federal Reserve Bank of Chicago. And then Shivani Siroya, she is the founder and CEO of InVenture. And I guess, let's start off, right? So I want to focus right now as to an introduction to payments. Can you guys briefly describe, the U.S. payment system? How complex is it? How many, who are the actors involved? And Jane or Dan, do you guys want to fight it out as to who goes first here?
I'll defer to Jane.
Oh, thanks, Dan. Appreciate that. So the payment system, I think, at the highest level consists of the wire system, so our RTGS system, the ACH network, which would be second in value to the wire systems. Are any of you all familiar with the ACH network? It's like the biggest payment system nobody's heard of, I think. Then you have the check system, which used to be a lot larger than it is today. The debit card system, the credit card system. So as you look at those, we would call that, I think, the payment system writ large. So the ACH network is $40 trillion in value a year. Our biggest user is the federal government, but you may know it as direct deposit. So for consumers in the United States, 80% of the households in the United States get direct deposit or get their payroll paid by direct deposit. Online bill pay, your recurring mortgage payments for consumers. Large corporates use it, so not just for direct deposit, but they use it for big trading partner payments. So paying, vendor to vendor. The United States government, again, is our largest user. So the United States ACH system is, you have two ACH operators, which are the Federal Reserve and EPN, operated out of the Clearinghouse in New York, which is private. And NACHA is the administrator of the ACH. So you actually have the two entities who are the switches for the ACH network, who run the payments, they exchange the payments. Every financial institution in the United States that receives a federal government payment, so that's virtually every financial institution in the United States, they agree to follow the NACHA operating rules, and that's what we do. We administer the ACH network. So it's the rules, risk, network development, enforcement of the rules through the ACH.
And how many members do you guys have?
So our membership is under 50, and consists of direct membership through large financial institutions, so all the largest financial institutions, but also we're also a federation. So we have regional payments associations, and the thousands of smaller financial institutions are members of these regional regional payments associations, and the regionals are members of NACHA. So through our membership, we hit about 10,000 of the 12,000 financial institutions in the United States.
And Dan, do you want to add on to that?
Yeah, so just kind of adding on to that, and you asked, what's the U.S. payment system like? We usually use the word complex. Mm-hmm. So Jane mentioned, the tens of thousands of financial institutions that there are, 10,000 plus. There are a number of network and service providers, probably hundreds of those that are in the space. And then you've got the innovators. So they have come out in full force in the marketplace to really start to add some additional services that maybe the traditional financial space has not provided in the past. So you've got those players. So when you think about the U.S. payment system, it is very different, it's very diverse, it's very complex, which really leads to why some of the things that we're doing when we start talking a little bit about faster payments and real-time payments is different than probably what's been done globally. So globally, when you have countries that can actually implement change through just a handful, and I'm talking 5 to 10 financial institutions, and you get 90% of the or 95% of the marketplace, it really makes it a little bit different when you're talking about the U.S. market space and how we actually facilitate change going forward.
So just if you could, I mean, what's the Fed's role within the payment system?
Yeah, so that's a great question. So you've got, we actually play 3 roles. So you've got the regulatory role that the Fed plays. Jane mentioned the operator role. So not only are we an operator in the ACH space, but we also provide wire services, cash services, check clearing services. So there's a number of services that we provide back to the financial institutions of the U.S. And then you've got this leader catalyst role, which is the role that I play and help facilitate in the marketplace, whereby we're actually taking kind of this leadership role to bring the industry together to facilitate some of the change that we're going to talk about today. So there's different ways that we can do some of the actions when it comes to payment system innovation and change. But when it comes to actually looking at and trying to develop and create either new processes or improvements, the way that we've opted to kind of move that forward in the real-time payment space is through that leader catalyst role, and really in a collaborative effort with the payments industry to move the process forward.
Now, Shivani, just to turn to you, I know you work in multiple developing countries. So what are your experiences in terms of dealing with the international payment systems? And tell us a little more about your company.
Sure. So what we're doing is really riding off of, I would say, mobile wallets rather than the traditional banking system. Right? So around the world right now, there are about 300 million mobile money subscribers. So far, what we see most people using them for are really around remittances, direct deposit, and bill payments. So we're not seeing a lot of real-time transactions happening. So what our company has done is leverage off of all of the data that's sitting in those mobile wallets and on the mobile devices. So about 2.5 billion people around the world don't have credit scores. And so what we realized is just using this kind of data that exists on the phone, we can actually develop credit scores and actually transfer money directly into that wallet. And I think the challenge that we're facing is really how can we use credit as a way of actually getting more people onto these rails and actually showing them that these systems are really trustworthy. Because I think here in the US, what we've really accomplished is the fact that, because of the rules and the collaboration that's out there with the payment system, I think consumers also really are obviously used to transacting with banks. They're now starting to get onto these mobile banking systems. But in developing markets where most of the customers are actually still unbanked, the traditional banks think it's too costly to go to them. So how do we actually what's the incentive so we can get to bring them onto the mobile system?
How difficult is that? For lack of a much more fuller question.
I think that, it depends on what country you're looking at. When you look at a country like Kenya, where you really just have one operator who's got dominance, you've got Safaricom, which is owned by Vodafone, who has about 95% of the market share, and about 26 million Kenyans. So that's out of a population of about 44 million people are on mobile money and transacting through it. I think currently it's about $1.6 billion of GDP is actually transacted through mobile money in Kenya. So there you've got one actor, and so there's not really a lot of collaboration that's really needed. But when you look at other systems like the Philippines, where you've got only about, I would say, less than a third of the market actually using mobile money, and you have a lot of different players in the market, you're not really seeing a lot of traction yet.
So let's dive a little bit deeper into the faster payments issue. You guys are obviously, the Fed has released a paper in January of 2015, I think.
That's correct.
That kind of laid the framework for the creation of the Fed Faster Payments Task Force and the Secure Payments Task Force in April of 2015. NACHA, as in of May, I think, 2015, you created your same-day ACH rules. So, But before we really get into that, do we need faster payments? First of all, I mean, if I bring out my card and I swipe my card, I might see that transaction on my statement at some point, maybe later in the day or early in the next morning, and that to me is fine. So why do we need this? And then where is the demand coming from?
So I think we do. I think that businesses and consumers need choices. So I don't think that every payment is going to be moving to a real-time payment or to our same-day ACH, because I think the payment systems we have today work well for most things, but not for everything. So for instance, think about emergency payments. If you have like a FEMA payment or emergency where people need to get money very, very quickly, you don't necessarily want to be using your RTGS, your wire system, to be wiring money. You want to be able to use something that's very efficient, lower cost. So whether that's a real-time payment, whether that's a same-day ACH, where you can move the money quickly and efficiently, but you're not having to use the real-time, kind of our wire system. When we looked at NACHA, so we looked at, right now we settle overnight. So anything that gets to the ACH operators by 2 a.m. will settle the next morning. So say your direct deposit comes in, it'll settle overnight, and by 8 a.m. you have funds availability. Well, that's great for a lot of transactions. But if you need to move money today, so I missed my payroll, or I had something, a file was corrupted, something went wrong with that payment, or the person just failed to transmit it to their financial institution, you need to get that money out to your employees fast. And so we as of September of this year, we'll be having 2 more settlement windows. So that means for credit payments. So that starts this September. So if you miss your payroll, you don't get it in the overnight cycle. It means the next morning you can put that file in and it can settle at noon or at 5 p.m. There's 2 more chances. So if anything goes wrong, you can start moving those out. So we've seen payroll's a good example for consumers, emergency payments. So emergency, whether it's I need to get an insurance payment quickly. Small businesses have cash flow. Like they have very tightly accounted cash flows. And so they really would like to have just-in-time payments. So paying my invoice today or my tax payment today to make sure that that can move out that quickly and not have that overnight, as soon as they can, as narrowly as they can time that payment, the better. So I think from the financial perspective, from the ACH, and we really believe that same-day ACH and real-time payments are complementary, not competitive, because everybody deserves to have a lot of, as I think one of our commenters said, we want to have a lot of tools. We may need different financial tools or different payments for different things, and we want to have a choice. We don't want to be mandated to use it, but we want to be able to use it if we think that our circumstances warrant it. So I think that it's great that we're all, moving in that direction now.
Yeah.
Dan, is there a need for faster payments? And if you say no, then I think we have a serious problem.
Then we got
right?
a problem,
Yeah,
with all the work that we're doing.
Yeah.
So let me put it in context of some research that we actually commissioned. So back in 2013 into 2014, we actually commissioned a study around what faster payments would look like, what it would mean for the U.S. And through that process, we actually identified about 12%, so about 29 billion payments in the U.S. annually right now that could benefit from a faster payment capability. So we looked at all the payment types that were out there and where, Jane identified some, same-day payroll issues, emergency payrolls, but there was a whole slew of other payment types, primarily tied to about 5 different use cases, either B2B, P2P, P2B, and B2P, and some variations of all those combinations of letters. But essentially, there were some key areas where the current payment processes didn't meet the needs of the end user from a payment speed perspective. So what we looked at that was really as gaps and opportunities in the U.S. payment system. So while we do have a very robust, strong, and very efficient payment system, there was still the opportunity for improvement for those reasons that the way the speed was set in current payment channels, it didn't align well to what the end users were looking for in payment speed. We also did a survey of end users themselves, and when we surveyed folks, a couple of interesting things came out of it. 69% of consumers and 75% of businesses wanted or expected their payments to be done in an hour or less. And we don't do that really today. Now, if you think about the card swipe, yeah, absolutely, that happens instantaneously. That works well. That was not one of the payment methods that was identified as being a gap.
But you know what? Okay, I'm just
Yeah.
jumping right in. See, we told you we'd be able to do this.
Yeah.
The thing that's interesting about a card
You
payment.
guys can put boxing gloves on too.
Oh no, we're
Yeah.
But the thing that's interesting about a card payment is that's an auth that's happening in real time, right? And the hold on a debit card might be happening in real time, but the money is not moving in real time, right? The money, the settlement happening between merchants and their banks is 2 or 3 days.
Exactly.
So one of the, and often on the ACH is actually how that's happening.
That's
So I mean, that's
awesome.
another reason for same day is you start having those settlements move faster.
Yeah.
Sorry, just
No, that's
Little
good.
color.
And let me give you one real life example that was brought up to me. So we do a number of speaking engagements where we're out there talking to folks in the industry, and I was doing a presentation to a number of accounts receivable managers, and they're, this is the first time they're hearing about real-time payments and what it would look like, what it could potentially do. And lady puts her hand up and says, "Hey, I'm a accounts receivable manager at a gravel yard." I said, "Okay." And she says, "Every morning I've got a line of diesel dump trucks lined up at the gravel yard, sitting there waiting for me to give them the go-ahead to actually pull in and get their gravel for the day, because I'm waiting for the notification from my bank that the wire has been received for that gravel shipment. So I'm not going to release the gravel to that hauler until I know that a payment has come in and it's good." So when you think about wire and being one of our fastest payment methods, but when you think of, that's the interbank piece, that happens pretty quickly. But when you think of the originator all the way to the receiver, there is a gap there. So it's not an instantaneous payment where somebody knows that, hey, if organization A presses go, organization B is going to get it right away. There is that gap because you have the intermediaries. There's not a whole lot of transparency in that payment process happening. Folks have to wait for it to be posted at their receiving bank and go through all those processes. So that gap, she said, those dump trucks are sitting there burning diesel, wasting all that fuel, being inefficient, waiting for that wire to get into our bank account before we release the shipment. So that's one real life example where a real time payment, if that hauler, their company just hit send on a real time or faster payment, they'd get some kind of notification. The accounts receivable manager would know it's there, and they're good to go and can send them on
or
their
they
way.
can turn off their engines.
Or they
Not
could turn
burn
it.
diesel.
I
We
guess
need
they
the
don't like to
beacon.
turn off their engines. She told me they were burning diesel. So
I think
Well,
what-
and,
oh, I'm
go ahead.
sorry.
Yeah,
no,
go
I
ahead,
was going to say that within our platform, I think we see that as well around faster payments. We get capital to customers now in their wallets in under 5 minutes, right? And I think that was the carrot, right? So when we're thinking about how do we get more customers using digital systems and using, even the traditional banking system, moving from cash to those systems, it's all about how do we give them trust. And from what we've learned, really it is about speed. It's if you can show people you can deliver on your value or your promise, and they actually see the cash in their wallet, they're going to come back to you.
Oh, I'd be interested. Are you looking to reduce that speed by any chance, or not to increase that speed by any chance? So now instead of 5 minutes, now it's just automatic.
Yeah. So in reality, it's actually under 1 minute.
Okay.
The 5 minutes is actually the customer actually getting registered, getting scored, and then accepting our offer.
Yeah.
So it's more on the customer side than on the actual automated disbursement side.
Do you want to add anything else?
Well, one of the things I was thinking about when we're looking at real-time payments. So some of the things as you look at the existing payment system is each of the legacy, and I hate to call myself that, like on here is the legacy payment person, makes you feel like you're 500. But anyhow, when you look at the legacy payment systems in the United States, they all have great features, and there are things that they don't have. So one of the things that Dan was talking about is transparency. So as a consumer, you think of wire as real time until you are wiring to make your mortgage, pay off your mortgage or to create a mortgage, and they're like, okay, that'll post tomorrow at 4 p.m., right? With the ACH, everybody expects their direct deposit to be there, and it's there, but if it doesn't show up, you don't know exactly where to go, right? You call your financial institution. One of the things that's interesting about the real-time payment systems that are being looked at now and that we're looking at, architecting through the Fed's Faster Payments Task Force and otherwise, are adding some features that the existing payment systems don't have. So transparency through the payment stream potentially, or notifications throughout the way, or some other interesting things, whether it's tokenization or being able to route through directories. There are things that it's a little bit harder that we are actually working on for the ACH, but that these, since you're building something from the ground up, you can add these features that you'd think that would make a legacy payment system better, and that are going to be just built in from the beginning with a real-time payment systems. So I think that's interesting.
For all you guys, what's the cost of doing this, right? How expensive is it to move to this sort of system? And I guess, who pays in the end?
Well, speaking for the ACH, so we
Sorry
did
to make you really
spend
uncomfortable.
about a year looking at what the costs are. And one of the things that that we believe is the value of a payment system is being able to reach all endpoints again, right? So every financial institution, if you have to start sorting to see whether you can make a payment and have it get somewhere, that adds cost to the system. So one of the things we were looking at with same-day ACH was, when we pass a rule with the ACH network, it means every receiving financial institution in the country automatically comes up, right? So they're mandatory. And so as of September, when we have same-day credits, 12,000 financial institutions, every financial institution in the country will be ready to receive payments. And right now, we have in the United States, huge financial institutions, global, and then we have little itty bitty financial institutions that are, small credit unions and community banks that are very, very small, that aren't even open 5 days a week. And so and everybody has to receive payments, and we got comments coming back from some financial institutions saying, we close at 2. So what do we do if we get a payment at 5, and how do we post it? So there are significant costs. It's not free, and every financial institution has to work with their processors or work in their own systems to be able to bring in payments kind of outside of the normal stream. And then, because the ACH is both credits and debits, there's exception processing that goes with that. So you have to be able to return things faster, which is another value actually. But you have to make things, be able to process exceptions, look at things. If money is moving out of your bank faster, you have to be able to have good risk systems, because now you're moving your money out a lot more quickly. So you have risk systems on the outbound side. You have to make sure you have exception processing on the receipt side, and it all has to happen more quickly. So there are costs involved.
Yeah, and that study that I mentioned that we commissioned came up with ballpark numbers, but
Right.
It was a very big ballpark. So others have kind of tried to replicate that and come up with other numbers. The bottom line is, exactly what Jane said. It's going to cost money to get something like this done.
Right.
But folks are really looking at this now, and the conversation has shifted over the last couple of years, where everybody was saying, well, it's going to cost a lot. Do we really need this? Why are we going down this path? To really saying, no, this is a strategic investment in the payments landscape of the U.S. So it's something that we as an industry really need to invest in and move forward. So it's come to that conversation where it's really come full circle to say there's so much potential benefit from moving to some type of a faster or more real-time payment capability that really outweighs the cost. But somebody's going to have to pay for it at the end of the day. But through the process that we're going through with the task force efforts, part of what we're asking the industry to kind of identify for those that think they have solutions for this is what's the rollout plan and what's the implications to financial institutions, market participants, how are people going to get access to the process. So a lot of that is happening right now. It's not anything I would put a solid number on, because again, that ballpark is just very big right now to figure out what that looks like. But from a strategic standpoint, I think most folks, at least in the U.S. now, are starting to get aligned to say it's something that we really need to chart a course forward for ourselves, not only to meet global implications, because we are in a global economy and things are changing. So you mentioned some countries that have different real-time capabilities, but there are about 20 or so countries that have implemented or are in the process of implementing real-time payment capabilities within their countries. So the UK's had faster payments for since 2008-ish. Australia's got their program underway, looking to stand up their capabilities. Singapore just recently stood up their capabilities. Mexico has a real-time payments capability right now. So there's a number of countries that have gone through this process. And really for the U.S. to remain competitive in a global perspective when it comes to payments, it's something that we need to look at as well.
Now, just to kind of, from your experience, from what you've been seeing internationally with real-time payment systems and people, countries developing them, for both of you guys, what lessons have you learned, and then what lessons have you tried to incorporate back into, your initiatives?
I think one of the things. One of the things that we hear, first of all, I think kind of level set is, why is it taking the United States so long? Since
we do like America to be number one.
Since the UK has had faster payments since 2008, why are we taking so long? And I think Dan hit the first one, which is the fragmentation and just how large our market is compared to any other country. And it's FIs for sure, but it's also endpoints. It's corporates use it. It's everything. It's just our scale is completely different. I think the shape our legacy payment systems in is also very different than a lot of other countries, from the developed to the undeveloped world. But I think one of the things, when the ACH in the UK was 3 days. So you put a payment in, and then 3 days later, that was their ACH, and ours is overnight. So I think there's a lot of reasons why other countries moved faster, but we do get the benefit of watching them roll out. And I think some of the lessons are, from the security perspective, is you have to understand that if money is moving the financial institution faster, you have to have great security in from the get-go. I think that might have taken some folks by surprise, the fact that the aggressive cyber fraud that was happening. So they were really, from the very beginning, the United States, the banks have been very, not cautious, I think appropriately cautious and appropriately thoughtful about how to control those risks. I think the other thing is, as much as we love to have the hockey stick, growth curve, we're going to flip the switch and 42 billion payments are going to be moving. It's going to be great. That has not been the experience of these other countries. They've seen steady growth, and it has been rising, but it wasn't. Folks aren't always changing their habits and their payment patterns overnight. They're seeing that there's a value, and then they're starting to move some things. They're watching it. So I think that's the other thing, is that as we looked out for same-day ACH, we thought over 10 years, probably 1.4 billion payments moving over. And that may be what we see. We looked at all of our use cases, and I think one of the things that we know is there's always the use case of those things you don't expect to happen. An entrepreneur or somebody's innovating, and then all of a sudden there's the unexpected use case. But we're not seeing the vast majority of ACH payments moving because they work very well. But slowly and surely, I think you're going to see payments move to the new payment systems.
Yeah, I think what Jane is kind of saying too is that there's benefit in not being first. So the fact that the U.S. is not the first market to go through this, we do have the ability to learn some lessons based on what other countries have experienced through their transition to real-time payments. The other piece is that we actually have folks that are participating on our task force that were involved in some of those efforts globally to bring up and evolve some of their countries into real-time payments. So we have that experience being part of the task force as well. So there's a number of touch points, but the point of the fraud, one of the things that the UK saw was as soon as they turned on their faster payment system, boom, the fraud spiked. So they figured it out pretty quickly what the problem was, how to close it down, and we're able to shut that down. And now if you look at the UK's faster payments process, it's actually one of their most secure and least fraudulent payment method type. So to see that and how other countries have responded and created their process really helped to kind of lay out a foundation for how the U.S. could potentially move forward. So I think we absolutely have the benefit of learning from some of these different systems that have gone into place. And your point about the different use cases, that was something also that was in that study was, we identified a number of use cases that could benefit, but then we kind of had this thing called latent demand. So we figured that, here's where we know that there's some payments that might benefit from a faster or real-time payments capability, but at the same time, there might be other payment types that evolve or other payment use cases that might come up where once you have a new process available to folks, people have the choice which way to go, and they'll determine which one is the best method of making payments for their needs.
Shivani, from your work internationally, I mean, is there stuff that you guys have learned that should be incorporated back here?
That should be, right. I was actually going to say that there's a lot I think we could even bring from the US to emerging markets. So I think fraud is a huge one, right? So, I mean, when we're looking at the markets we work in, most of the markets don't have a recognized credit bureau. So we are coming up with our own rules for how we mitigate fraud and how we verify identity. I would love to be able to take a lot of the learning lessons that we've had here and bring that over there. Right. I think the other thing is, you know, when we're talking about these systems actually just being built from scratch, you know, in Africa right now, the credit card prevalence is 3%. Right? So in terms of when we're actually connecting these wallets or these bank accounts to these e-commerce websites or to bill payment providers, that's happening for the first time. And so they are actually getting to build it the right way right now because they're taking everything that's been done and then building it for what the consumer also wants and what merchants and corporations want. But I think we've learned from emerging markets, though, is I think I would say one is definitely around, I think, the innovation behind how people are using their own payment systems, right? So I think we could do a little bit better job here of, I think, innovating on what are the different features that, I mean, again, it's not on the Rails side. I think it is much more on the banking platform side. So why does a consumer have to go to so many different platforms? Whereas can we come up with a system so that they're having one financial experience in one place? So I think that's more just adding more value on top of payments. But I don't know if I mean, again, it's just speed as well.
Yeah, that's actually some feedback that we got from that study was that both consumers and businesses, we don't want to be part of 30 or 50 different payment platforms or processes. It's just way too complicated. We need to be able to pull this in. We want to have our choice of where we do the majority of our banking, but you know, the complexity and the fragmentation that we've got with some what are essentially real-time payment capabilities that are out there today. So they do exist today. They're just not in the form of what we would typically call a payment system for the U.S. space. So folks have said that to us as well. You know, we don't want to be part of all these different communities. We want to manage it ourselves, kind of like we do with the cell phone model. You know, today you just dial a phone number, whether you're T-Mobile, AT&T, or Verizon, the connection just goes through. I don't have to know, or I don't have to have 3 different phones to call my friends that are using different phone carriers.
But that's been part of I think the fintech innovation has been, and a lot of it, it's just incorporating the payment as part of the, you know, say the Uber, it's just part of the experience. But other ones, when you look at like the alternative payment providers, they're using, generally speaking, clearing and settlement. So if you try to get the money out, it's coming out on your existing rails. So it's going out on your through ACH generally, but it could be going out through other payment types. But what they've done is they've taken the friction out of the payment and they have closed networks. So you have to join, you know, everybody thinks of PayPal, but there used to be a whole bunch of them, right? So you have to join to get in, and then it's real time within a closed network. It's everybody else who belongs, but then, so I think that's what we're thinking about with real-time payments is if we end up with a multi-provider environment, so if you have more than one real-time payment system in the United States, how do you ensure that you don't have closed environments so that you can reach out and your real-time payment provider can touch a financial institution that belongs to another one, for instance. So you need interoperability and you need governance between that to make sure that you can have that so that it's seamless, so that you don't have to have membership or joining or small closed networks, that you get the ability of having a network effect that will be able to allow you to hit every financial institution.
So just to get back to the faster payments aspect, which the speed of money, where are we now and where are we going? What's next?
Yeah, so let me talk a little bit about the work that's being done with the Faster Payments Task Force. So you mentioned we released a paper in January of 2015. Part of the paper was identifying what we call desired outcomes as far as improved payment speed, improved payment security, improved payment efficiency, a little international component as well because of the globalization of payments. But we essentially called for the industry to come together through these task forces that we formed. So we brought a very diverse group, and I say 330 of my closest friends are on the task force, but there are folks from financial institutions are about a third of them. Network and service providers are another good chunk of them. But we have consumer interest organizations, business end users, government end users. So you've got
Don't forget us.
and you guys,
Yeah.
yeah. Jackson just joined himself. You've had a representative on
Yes.
the task force for a
Yep.
while, but now you're on there, so we welcome you as well. But very diverse group of stakeholders that are involved in the U.S. payment system to really come together and figure out how, for the U.S., we get to a faster, safer, ubiquitous payment, real-time payment capability. So those folks have come together. When you think about that, we joke at first that you bring that diverse group together, you may end up with just a food fight and nobody's going to get anything done. But the good news is that the group did come together. They put on kind of what I'll call their bigger hat, which was, they turned their company hats to the side a little bit and said, I'm going to wear the U.S. payment system hat here and see how we can drive collectively to improve the U.S. payment system. So they come together. They've accomplished a number of things just in the 9 to about 10 months that they've been together. And probably the biggest one was this deliverable that they had just at the end of last year and into the beginning part of this year, which was the effectiveness criteria that essentially is the framework that is going to be used by the task force to assess and evaluate different solutions that could be brought forth for the U.S. to meet a real-time payments capability for the U.S. market. So those effectiveness criteria identified everything from what speed is, how fast does fast need to be, what is ubiquity, and how do you get to that state of having a true payment system. Governance, you mentioned governance. How does that look in a potentially new payment process? And last but not least is security. There was actually 36 criteria that were identified in a number of sub-criterion, but 11 of the 36 of the criteria actually address safety and security of any new payment capability. So strong focus to the points earlier about you can't just have something new and fast and your shiny new toy. You got to make sure it's protected and operating in a safe and secure manner. So they've pulled that together. That is in place now. That's actually available to the general public. So you're welcome to go out to our websites and take a look at that. Great bedtime reading, 51 pages of criteria. But it's interesting the way they came together. And they approved that criteria as a group with a 97% consent rate. So when you think about that, all these different diverse stakeholders coming together and saying, this is kind of the path forward for faster payments in the U.S., identifying all that different criteria that would be needed. A lot of the criteria are aspirational in nature, so to Jane's point, it's probably not going to happen on day one. There's going to be iterations and improvements along the way, but here's kind of what the guidelines are, and they're not standards and they're not a mandate or anything, but it's giving folks in the industry a target to work towards to say, here's how we meet the need for faster payments in the U.S. So that is complete. They've just kicked off what we're calling the proposal assessment process, which is the task force has asked industry participants to bring forth their solutions for how the criteria could be met in the U.S. So identifying payment speed, the safety and security, the ubiquity, all those aspects, having those folks, the solution providers, bring them forth. And we actually created an independent qualified assessment team that are going to review those different proposals. The submissions for the proposals actually just closed over the weekend. So we closed that down on Saturday night and had all those proposals come in. And now it's going to be turned over to this qualified independent assessment team. It's not an RFP process, so there's not going to be one winner or any losers, but it's going to be an independent evaluation of the different proposals as to how they match up to the criteria. And then the group is also going to look, so they're going to do a vertical look at each one of the solutions, but then they're going to look horizontally to say, every solution probably did a good job at this, maybe at payment speed, but maybe they need some work in governance, and maybe this is a gap or an opportunity where the industry really has to focus to figure out how, to Jane's point, maybe it's ubiquity, maybe it's governance, how we solve those challenges going forward so that we actually do have something that looks like a real-time payment system for the U.S. Yes. Are we doing questions?
Not yet.
Yeah.
Yeah, we may have time at the end.
Yeah.
Just to, so it's amazing that you've gotten everyone on board. My question though is, when you have the clearinghouse and FIS coming out with their own real-time payment system in Q1, you have NACHA, doing same-day payments, and all three of those firms and associations are on the steering committee. Is there a concern from the Fed that you might be losing cohesion?
No. In fact, the feedback that we've gotten from those folks is that this process has actually helped them to improve their processes going forward. So the task force effort wasn't meant to stop any innovation in the marketplace or delay it. The thought was to draw it in and create an environment whereby some of the other challenges that are more systemic could be addressed by the larger payments community as opposed to an individual company or organization. So giving folks the ability to have dialogue with other industry participants, get that feedback from the end users, like the businesses, like consumer groups, what consumer groups are looking for, gives them the ability to draw in that information. So it's been a very collaborative, productive environment where folks are, to the point where getting things done. But things are happening in the payment space where people have announced that they're standing up different capabilities, building new systems, and we expected that to continue to happen. This is trying to address it more from the macro level to say, here's what we need from an industry perspective to actually create a payment system for the U.S. and how do we address those gaps. So, you'd have to ask them, but
Right.
From my perspective, it's certainly been, and again, from the feedback that we've gotten from steering committee members, task force members, is that it's been a very good learning process for all participants to be able to see what's happening from other people's perspectives.
I think from a same-day ACH, we started working on this well before the Fed task force was joined, so probably 2010, 2011, we started working on it. When you need to move 12,000 financial institutions, it may take a little bit of time. But I think from the Fed, the catalyst role, the leader catalyst role has been very important. What was it, 2013 that you released the paper on payment system improvement? It was
The consultation paper.
consultation
That was the
paper.
first one,
So
yeah.
that was a paper saying, we believe that there are gaps in the payment system, and we would like to see what you think about. So there's a series of questions about perceived gaps in the payment system. One of them was a lack of a faster payment capability. And I think at that point, that started signaling the industry, that the Fed was looking at this, they were taking it seriously, that they were watching what was happening around the world, and that folks needed to saddle up a little bit in the United States and start focusing. And I think from our perspective, since we had been working on same-day ACH for a few years already, that helped. It was a very positive influence because one of the gaps or the things that came out of it was, doing as an ACH operator, doing what they could to start moving the ACH forward. So that's a very strong positive message to the industry saying, we think it's time for you to start making these improvements on your own, and we will act as that catalyst or that leader. So I think that has been really positive. And I think, we have early warning has their real-time payments pilots already going right now. The clearinghouse is working on theirs. And so I think that means that we have people very interested with real-time payments and making that a reality. So I think, hopefully, our same-day ACH will have credits this year, debits next year, and then requirements for funds availability to make sure that ACH credits are actually being able to take it out of the ATM very quickly. By that time, we should have the first real-time payments really working out of pilot and going on. So I think 3 to 5 years from now, you're going to see robust, faster payments capabilities in the United States. And I think that's due largely to the leader catalyst role of the Fed, but also the industry can get together. We can collaborate to move forward without a mandate from the competitive authority or other places like some of the other geographies have had.
At the end of the day, what does a faster payment system ultimately look like? And I know we have multiple parties now. The steering committee example, for instance, that are moving in their kind of own direction with real-time payment systems. So are we going to see a plethora of real-time systems and faster payment systems, or is it going to be it sounds to me that it's not a one-size-fits-all faster payment system that we're going to have, and it's just going to be a bunch of either real-time, same-day systems. And I guess my question is it going to be difficult to operate between different systems?
So same-day ACH, I think, is very different when we think about the real-time system. So same-day ACH, every financial institution in the country is going to be supporting it, and that is a different functionality. So this is probably maybe too much detail. So you give me the big axe. The ACH it's a batch payment system, and that's why it's incredibly efficient. And that's why corporates love it. It's because you put in tens of thousands or hundreds of thousands of payments in and you move them in a batch. So it's very efficient for governments and for, say, direct deposit and things like that. The real-time system is a one-off payment system. So I'm making a payment to Dan, it's happening right now, and it's happening quickly. That's very different than maybe a corporate treasurer would want to do to send out every direct deposit that they have, right? So in that way, the real-time payment system is more akin in that way just to the wire system, which is the one-off payment. So they're very, very different capabilities, ACH, from the real-time systems. I think the interesting thing will be, and so there are reasons why you'd want to use that for ACH. So I might say I want to pay I need to pay my electric bill right now. I need to pay it because they're going to turn off my electric tonight, and I can do that same day, and my online bill payment system will let me do that. Or it could be I need to pay it in the next 26 minutes, or I'm in big trouble, and I might want to use a real-time payment system for that. So I think that there's choices on the consumer side and on the corporate side about why you'd want to use them. But when you look at, so you put the ACH aside and you say real-time in the United States, I think that's where it's going to be really interesting. So do you end up with multiple providers, hopefully that are interoperable between them, and hopefully that have governance between them, but that may evolve or may not evolve, we don't know. Or do you end up with multiple providers and then you start seeing through the market that one catches fire and other ones don't? So I think it could go either way. You could end up with one that becomes, fait accompli. After a while, that they become the only provider. It's interesting that the ACH network 20 years ago had 4 ACH operators, and today there's 2. So it just depends on how this shakes out.
Maybe the evolution of the process.
Yeah.
So I think one of the things is the payment attributes. So people are going to pick their payment channel based on the attributes that payment channel brings to their process. So folks will be able to pick on that, but the process will evolve over time is certainly my expectation. The task force is going to look at this to say, hey, there's multiple strong different solutions out there for the U.S. marketplace. One might be a very good B2B solution. One might be a good P2P solution. So there could be multiple providers, multiple rails. We don't know yet. So that's going to evolve through the task force process. We're going to be able to see some of that coming out really over the next 12 months. So about this time next year, we should have what we're calling the final report from the task force work efforts, where they're going to look at, hey, there's some multiple viable options here, but here's where there's still gaps that we have to figure out how we either bridge them together, create governance structure, whatever it is that is needed to actually facilitate that process. So it's still something TBD, but one could rise to the top just from marketplace developments. You look at the ATM process 20 years ago as well. If you remember, you used to have to go and check the bug on the back of your card to make sure that you're using at the right ATM, when you go to get money. Now you can pretty much go to any ATM. So that didn't happen overnight. So if you look at history, I don't know if that's going to indicate what rolls out with any new type of process, but the expectation with the diversity, the complexity of the U.S. market is that we're probably not going to all of a sudden on one day just poof, there's this whole new payment system. It's going to evolve over time. And then folks will see it as it comes out. and say, hey, now we're kind of there, and that's something that we may do and kind of relook at it. Did the desired outcomes that we laid out within the paper that we released in January 15, are they being met, or do we have to do something else to try to get over the hurdles that were identified by the task force?
One thing that brings up the ATM analogy. So it's absolutely right. Do you guys remember that with the ATM, right? Okay, some of you guys remember that. Maybe not everybody, but some of you do. But the interesting thing is all of the ATMs are on the ISO 8583, right? They all of their formats were the same, even though you might have had Star or Most or whatever, Pulse. The technical interoperability was already those. I don't know if, I guess that it just came up that way. I'm not exactly sure, but they all had the same format. So the interesting thing will be to see with the real-time payment systems, are they using this similar format? So is that technical interoperability actually something that could be easy to happen? Or so all you need is a rule set, or is it something that they're all using, whether it's an ISO 20022 or whatever format they use, are they all different? Because if they're disparate and they can't really readily talk to each other, then you need to have mapping or something else. So I think that'll be an interesting thing to see as this plays out. Is there already going to be technological, from a technology perspective or formatting perspective, interoperability that could happen pretty easily, or you're going to have to really work on it.
And that's actually one of the criteria that was laid out by the task force, that these solution providers have to identify how would you potentially do this in a bigger scheme. Mm-hmm. So we'll see what comes out of the proposal process.
So last question, then we can do a little Q&A. Who, under this faster payment system, whether it be same-day ACH, real-time payments, one question we'd like to ask in DC is who regulates? And is the current regulatory structure in the payment systems today, is that going to change?
I don't see it changing.
Yeah, I think it's a little bit TBD too, because the proposal process, that was one of the things, was the legal structure in which these things would operate. And I think, the sense that we're getting from the task force discussions and deliberations is that might be one of those gaps to figure out how do we slot it in there. Do they fit under current regulation? Does current regulation cover that? Or do we need something new or different to be able to facilitate it?
Yeah, and we already have a very robust, as people may be aware, regulatory framework in the United States, both on the prudential side, but also our consumer protection laws are some of, when you look across the globe, we have some of the most structured consumer protection laws in the United States as well, way more than a lot of other geographies. So I think, as you look at ACH, even if it's moving the payment faster, it already has, regulation as a consumer protection for consumers, for instance, or UCC 4A for a business-to-business payment applies to it. So, and then you have your prudential regulators who regulate the financial institutions and at least the private sector operators. So we already have that whole structure set up. The question would be if real-time payments has something different that would create a reason why you'd want something different from that.
Right. And that's why those proposers have to address that, to say, right, can we live within the framework that we have, or do we need something different? Right. And the CFPB actually sits on our task force as well, so they're there too, and right in the middle of all the deliberations that are going on.
So it's on the legal piece of the FASTER task force. Mm-hmm. One of the things you talk about is if you need a law to enable something, wow, A, that could take a very long time, and B, it may not end up the way that you thought it was going to be when you decided that was a good idea to start with. So to really ask folks, can you stay within the current regulatory framework?
Yeah.
I think we got about 5 minutes left. Does anyone have a question?
Burning payments questions.
Burning payments?
I thought somebody back here had a question.
He's got a microphone for you. Sorry.
A couple things. One is open text has been a really problematic issue with speeding up payments. Is there discussions about getting rid of open text fields? Also, the other issue is, where do you see blockchain, Ripple, things like that? Because to a certain extent, that's your competition.
So from, you want to take the open text one?
Not really, because I'm not highly technical. So one of our big challenges is the fact that the ACH has a fixed field format that's very, very small. But we do have addenda records that can reach up to 10,000 addenda records that move, so you can have that much information with the payment. And so we are Right now, you can use XML within those. You can use ISO 20022. The issue is being able to have trading partners who understand what you're saying and being able to define those. So
Put all sorts of stuff in there, and then you got to figure it out,
it's
and it stops, and it can't be
exactly.
processing, and
So we're
it ends
trying.
up in the DNF world, and
We're
where the hell how you train.
we have data mapping and a data dictionary that we are looking at putting into rulemaking that would help to define some of those fields. There's also God help me, now this is where I'm really getting off, the STP 820 that is a fixed, it's defined for some formats. But again, you need your trading partners to agree on that. And that's where, especially for small businesses, that's a challenge. So.
And we kind of put that in the payment efficiency bucket. So if you actually look at the criteria that the task force developed, they talk about some of those issues, because from a payment efficiency standpoint, if you can't just go straight through processing, then you're going to run into some challenges. So again, it's going to be up to the service providers to kind of create the framework of what that looks like. But they tried to put some framework around how to guide that because of some of the challenges that have been out there in the marketplace. The other alternative payment types, blockchain, things like that, we haven't really taken a position on that, but there are folks in that space that are participating on our task force. And they were, the way the task force laid out the criteria and the way the solutions would be brought forth, they did not specify either a format or a payment channel or type. They left it open to see what the marketplace felt would potentially support that. So whether it's existing rails that could potentially support it, like the ACH or the wire system, cards, we're still TBD on that as well, because those proposers will come forth with some of those solutions. So could there be potentially some of those in that pool? Quite possibly.
Yeah, I just want to share, I come from Indonesia.
Oh.
So we are 250 million population. Today we already have the real-time gross settlement. We have a national payment system. So as of today, I can do my mobile banking, SMS banking, internet banking from my handphone. So we are far more fortunate because we started from scratch, from electronic clearing system. We had batch and then electronic clearing of each capital city of our provinces. Then we move in. It took us maybe 1 year to socialize what national payment system is all about at the central bank. And it took us like 6 months to come up with the blueprint of our national payment system. And it was 30 projects as the fruit of that. And then we move into the real-time gross settlement. It took us 18 months to develop the system.
Fast.
But before we roll it out nationwide, it took us another 2 years, because each city has to be ready, the branches of the central bank, and then we have to precondition the commercial banking. So we had 2 consultants from New Zealand who had an experience of putting a national payment system in other countries. We were a system integrated service provider. So together we work with them, and we facilitate the central bank. And it was fortunate when we identified that our country didn't have a national payment system, that those postgraduates from the central bank that were sent off to wherever in the United States and all over the world came back. So we put a system together to have 26 officers from the central bank who was fresh with all those knowledge, and us from the IT's perspective. So we work on that for that. So we started, it's at 97, the real-time gross settlement, the first generation, and we just roll out the second generation today. So it's a straight-through processing, so the stock exchange is already integrated, the bonds is already integrated, so everything is integrated. So, I mean, that's just an example of how we could leapfrog because we didn't have
I think
anything.
that's a
It's a
great,
legacy
the
system.
leapfrogging is a great point. And it's what you're seeing too, which is if you don't have any payment system, you can adopt the new technology. I mean, it just makes sense to go in and do the best of what you can do. That's why, the mobile payments, in the United States, we're all still, will mobile wallets be successful? I mean, we've read those articles for 15 years. I think we're yes now. But so I think that the leapfrogging is one of the things that you see where you can really make big advancements. And one of the reasons, again, why the United States hasn't been able to move at the same speed, because we're not in the
You had a
leapfrogging
legacy
position.
system, right,
Exactly.
right.
We have robust legacy
Yes,
systems.
yes.
So I think that's a great point. And you're also seeing that with a lot of the geographies are moving to ISO 20022. It's because they didn't have any robust formats, that they had very, very skinny formats. They
Exactly.
couldn't move any information, and so they just said, look, we can blow this up and start fresh, but we don't have that same thing here. So I think that it's a great point.
Well, we saw it in the state-owned enterprise banking. They didn't have that, teller system. We were fortunate. Our group was one of the first private bank in Indonesia, and they bought the Citibank system back in 1974. So they moved into the teller system. So in 1985, we developed for them the first current account real-time system based on a UNIVAC framework, but we adapted to the Indonesian banking regulation. So we implemented the first ADM system in the country. So we had, integrated ADM system. We were representing all the American company with the dual processing and front ending and whatever. So with that experience, we moved to the central bank. So it's quite fortunate that we had that experience based on what we learned also. So we had Federal Reserve consultant also in the central bank and people
Can
from
only help.
IMF. And so when the bank crisis took place in '97, we were fortunate that the central bank understood what national payment system is all about. So we were safe, and the crisis of 2007 was really not significant anymore because we were in control of all these things. And that is really a fortunate thing if you have everything integrated. So now we are moving into the sort of like, regional banks, the community banks, it's the small banks, but they are under the custodian of the bigger banks. So it's a fortune. So I can do, my driver has sort of like, a saving account, so I can real time from here. If they need some petty cash, I can transfer it to them. Toll
And he
gates
get-
are
and he
all
gets
over
it right away,
wallet,
right?
Right, exactly,
Yeah.
yeah. So it was astonishment. I was learning about the, the Bitcoin. I was wondering, do we really need Bitcoin in Indonesia? So, and what is the one that we just discussed, the
Ripple, or the
the
distributed
black-
ledger,
what is the-
blockchain.
Blockchain?
Bitcoin's a form.
No, just now before this session,
Uh-huh.
we went to the
Blockchain?
blockchain,
What is a
right? So I
blockchain?
was trying to understand what blockchain was all about. So actually, it's not part of the payment system, but it was just authentication of another community integrated maybe with the payment system, right?
And I
So,
gotta,
yeah, thank
I
you.
gotta cut you off there because
Sure.
we are done with the session. Thank you all for attending, and please thank the panelists.